Claude, we've had a bit of a mixed start to the new year here in South Africa. We had the market starting in a pretty good footing. Towards the end of the week, a bit of a pullback, and also today, and of course, nothing does go up in a straight line. How are you viewing the South African equities market as we enter 2011?
Yeah, good afternoon, Stephen. I think looking at the outlook for 2011, given the fact that, remember, the market's off almost 80%, or up almost 80% off its lows since November 2008. So going into 2011, I think one's got to be a little bit more circumspect about your expectations in terms of returns. We see the market as being, at best, at fair value, if not starting to start looking a little bit expensive at the aggregate level. So I think investors need to be a little bit more cautious in terms of their expectations. So from a long-term perspective, if you're receiving your cost of capital or required return of 14% annualized, I think you're doing a pretty good job.
He's in this market, though, in particular segments, Claude.
I'm sorry, can you just repeat that, Steve?
Are there still some particular segments in the market that are offering value at these levels?
Look, I think there are certain sectors that are looking more attractive on a relative basis. So if you look at financials, if you anticipate a reasonable recovery in terms of the banks and the life insurance sector, which we do anticipate off a much lower base, the forward PE multiples of the banks are around about 10 times. And we think that's fairly realistic dividend yields. So I think within financials, we see relatively more value. And then on the small cap side, they select small cap stocks, which are arguably offering quite a bit more upside than the broad-based sort of industrial sector. So there are always pockets of value, but it's becoming a little bit more difficult now with the breadth of the market from a valuation point of view narrowing quite significantly.
Well, coming into the new year, many fund managers saying the resources sector would be one to watch this year. We saw commodity prices up quite strongly at the beginning of the year. A bit of a pullback towards the end of last week, though, particularly after China raised its reserve requirements for banks again. Would that be a theme that you're watching going into 2011? Because there is talk that China could raise interest rates again and keep on tightening monetary policy.
Sure. Look, our view in terms of the long-term growth and demand, certainly for commodities, hasn't changed by much. We still think that there's an enormous amount of pent-up demand, certainly coming from Asia. So that story hasn't changed. Obviously, from a valuation perspective, there are areas where we see more relative value. So if you look at the likes of some of the diversifieds, in particular Anglo, where when we value the likes of an Anglo, we use commodity prices, the basket of commodity prices, which are on average about 40% below the current spot levels. And on that basis, we still see marginal upside. But if you had to look at what the market's anticipating, i.e. looking at current spot commodity prices, and you input that in terms of valuations, there's a lot more potential upside in the likes of an Anglo. So very selectively, maybe in Anglo, to a certain extent, Sasol, there's arguably some value there, but maybe less so in some of the Platts and the bulk producers like Kumba Iron Ore, Exxaro. Those stocks we see as a little bit overvalued at current levels.
Well, I saw some numbers out of Kumba Iron Ore today. They're expecting earnings to be about double, really, due to rising export prices for iron ore. We also had Anglo Plat out last week with a trading statement. De Beers this evening updating the market as well on some numbers. So this all bodes quite well for the numbers from Anglo American itself when they come out, doesn't it?
Yeah, it certainly does. I mean, keeping in mind that the earnings base, if you like, and cash flow base for the likes of an Amplats is very low, given the fact that 12, 18 months ago, the platinum price was a lot lower than where it is currently. So you should anticipate that with the big re-rating that we've seen in the platinum basket, that the earnings and cash flows of the platinum producers should be significantly better than what they were 24 months ago or 2 years ago. Having said that, one's got to look at relative valuations again, and as I indicated earlier, if you strip out the valuations, the listed valuations, i.e. Kumba Iron Ore and the likes of Amplats, out of the Anglo valuation, the unlisted part of Anglo looks particularly attractive. So again, we see more value in the likes of Anglo relative to some of its underlying listed entities.
Claude, you pointed out the financials on a relative basis were looking quite attractive. Would you say they're looking attractive compared to the retailers? We've seen some of those retailers out with trading updates over the past couple of weeks, looking pretty strong. Foschini today saying that sales grew over 22% in December alone, up about 18.5% for the 3 months to December. But those retailers have run pretty hard though.
Yeah, look, I think it's fair to say from a valuation point of view, the banks, in our opinion, look a lot more attractive than the retailers at the aggregate level. So, I mean, there's been a lot of good news priced into the retailers. The environment for the retail stocks has been very positive. I mean, we've seen significant drops in interest rates. We've seen real wage increases that are amongst the highest levels that we've seen in many years. So that's very much conducive to a positive retail environment. Having said that, one's got to look at what is priced into many of these stocks. And from that perspective, we don't see any value at all in the bulk of the retailers. And then switching over again to the banks, where the banks haven't re-rated at all. I mean, obviously, we have to see the rollover in terms of bad debts. We need to see the environment improve for the banking stocks. But again, if you look at valuation, we see a lot more relative value in the likes of the banks versus the retailers.